What's going on, traders? Andrew O'Connell here with Pristine Capital. It is May 2nd of 2022. Let's talk about the markets. Thanks so much for your patience. I did not put out a video on Friday. I was actually at Penn Relays. My girlfriend was running. She was representing my alma mater, Vanguard, in the Penn Relays Corporate Distance Medley. Vanguard came in 4th place, which was awesome. So it was pretty cool to watch them, cheer them on. They actually had qualifiers for the Olympics there as well. So there were a lot of crazy looking athletes. But once again, appreciate your patience, but we are back. So let's dive into today's markets and let's see this crazy action here. Our market indices, they were down early on in the session and then they had a pretty wild reversal. We finished off with the S&P 500 up 0.64%. We had the NASDAQ QQQ up 1.67%. Our IWM small caps, they were up 1.09%. Dogs of the Dow, they actually lagged today. They were only up 0.35% because the Dow Jones has a lot of the value stocks and or inflation hedges, and those are getting progressively weaker in terms of their trend. We're going to talk about that in a moment. And the ARK Innovation ETF, I bought calls on this ETF. I believe it was Thursday. This one was up a whopping 6.37%. Volatility was down for most of these indices today, and the breadth was positive with 69% advancers in the IWM small caps. That being said, my trend model is still at a -3, and I did receive some inquiries about the trend model and where people can get access to it. This is a proprietary indicator that I coded when I started as a proprietary trader. So this is something that I make available to all Pristine Capital members. I post it in our market analysis chat whenever this thing flips. And I also have all my rules as to how I use my trend model, and I make those available for Pristine Capital members. So go to pristinecapital.net if you would like to sign up and join us, and we would love to see you in our trading community. Finviz Heat Map. Look at this. Some of our mega cap tech darlings actually had bounces today. We had Nvidia up 5.32%, and we had Tesla up 3.7%. Microsoft is up 2.5%. Let's take a look. We are starting to see some rotation. Let's definitely talk about this because remember, I believe it was last Wednesday, we had some negative GDP data that came out. And as soon as this data dropped, I mentioned that we could be entering a slightly shifted paradigm here, where for the last 6 months to a year, I would say everyone was investing based off of high inflation. Hey, I need inflation hedges. I need commodity stocks because inflation is going to be high. Hey, I need to dump my growth stocks because those are sensitive to rates and sensitive to inflation. Let's dump long-term treasuries. That has been the MO for about 6 months to a year. But with that negative GDP number and some early signs that perhaps inflation could be peaking, now I'm starting to see the very early signs that investors are developing an appetite for some growth stocks. KWEB, the Chinese government is committed to more stimulus, and we see this group is at the top of our momentum list. This group of stocks is very difficult to trade because it has such wild moves back and forth, and there's all these regulatory concerns. I think if you want to get exposure to these Chinese equities, what could be prudent, what I might end up doing if my trend model flips, is gaining exposure via options, like going very small and being like, all right, let me risk what I'm willing to lose on these China stocks, and I'll put it in options. That way you don't get like chopped up or stopped out when this thing has, its big back and forth moves. But look at this. The ARK Innovation ETF was obviously the leader. ARK Genomics was up 5.18%, and this ARK Next Gen Internet Fund was up 5.23%. I think a lot of investors, they're going to look at this and think it's some sort of coincidence, some sort of like disbelief as to what's going on here. But I think this could be the early signs of a very violent bounce. And that's why I put those calls on in ARK. Let's take a look at these indices, and I want to point out something that is very important in the S&P 500. Let's jump over to it. S&P 500, look at this. This is our weekly chart, and we've discussed this at length, that we trigger this 80% bearish rule, and that is when you enter a value area from above and you descend into that value area, there's a high chance that you end up testing the other side of value. And today we finally achieved our 4,055.25 target, which is the yearly value area low. Now, of course, as we hit these lows, everyone on Finviz was getting super bearish and like, all right, let's buy puts. But this, in terms of downside, we've hit our downside target ahead of the Fed meeting. Now, anything could happen. The market's in a downtrend. This thing could just, keep cascading below. But whenever you hit a very significant level of support, that typically, let's say you do have some shorts on, like let's say the put butterfly that I made a video about. Let's say you put that on. I closed it out maybe like 2 days ago, admittedly a bit early. I still got like a 58% winner out of it, but I was checking today, it's marking at like a 100% winner. Tagging a key support level like that, that's a great spot to take targets if you're short. That's not where you want to be initiating new short positions typically. Let's say we base around this level for a couple weeks and then we break it to the downside. That could be an area where if you're not short, you go ahead and reinitiate some of those shorts. But for now, we did have a pretty violent bounce at that level. Let's look at our daily chart. We undercut the level. We probably took out everyone's stops that was setting their stops below these prior lows. And then we ripped to the upside. If you're short the market, I would definitely be shaking in my boots ahead of the Fed meeting. Let's put it that way. All right, let's take a quick look at our NASDAQ. And then we will jump into my trades for the day. We'll look ahead to Fed Wednesday very briefly, and we'll also pull up some charts. So NASDAQ, same exact deal. We had this undercut and reversal. All right, so let's jump into my trades for the day. Remember, today is a brand new trading month. So it's a great time to turn over a new leaf. And that's exactly what I did today. Take a look at this. I actually closed out. This was my worst trade for April. I had these TLT May 20th 130 calls. I sized these for a max loss, and I was holding on to them just in case they turned. But these, finally today, I just cut the position. I hate looking at losers in my account. So I said, let me cut this out. I paid $2.90 for these. I cut them out for 20 cents. And I would say this was poor trade selection because the TLT, first of all, wasn't an uptrend. And I was playing this thing for a bounce. I actually got the bounce I was looking for. And at one point, I was up maybe like 50% on these and I didn't take a target. And then this TLT just kept on rolling over. So this one, sometimes you have these losses. For me, they are very frustrating because I always want to trade like a professional and really just make the most high probability moves. This one I would say wasn't. But to be honest, you just gotta move forward and just try to get better from it. So that's what I'm doing. So my other trade for today was ONDS. This is the name that we talked about in our Pristine Capital weekend watch list. And this one, there's a lot of reasons why I want to keep tabs on it and why I am bullish on it. But look at ONDS. What I decided to do, instead of getting long the stock, instead of getting long call options on it, etc., making like an explicit bullish bet, I sold the May 20th 7.5 strike puts for 50 cents. And I decided, hey, my put sales, these are doing really well for me this past month, even though the market's been weak. So why don't I just continue with that strategy? It's working very well. So let's just keep going back to it. ONDS, this is up above its monthly value area and it actually closed a little bit lower. So with this trade, by selling the 7.5 strike puts, if the stock goes to that level, I am obligated to buy the stock for $7.50. But I took in 50 cents of premium. So if I do end up having to buy it for $7.50, my cost base is actually $7. So it's a great way of selling some premium. I like doing it when the implied volatility is incredibly elevated. If I end up taking ownership of the stock, great, because I want to own it anyway. If not, I get to collect that premium and just hold on to it. Let's preview Fed Wednesday. Let's see what we got. We'll talk about this more tomorrow as well, but we only have essentially 2 more days. We have Wednesday. The market is pricing in a 100% chance that there's going to be a 50 basis point rate hike. That is baked into the cake. If that happens, there's going to be no cause for concern. The real sticking point that everyone is watching for is, what is the Fed going to do in terms of their balance sheet tightening? How much are they going to roll off every single month? Is it going to be 20 billion, 30 billion, 40 billion? Apparently the latest and greatest is that they guided in March in the Fed minutes and they said the maximum it would be is 95 billion. So the market's already prepared for up to 95 billion per month of Fed balance sheet roll off. I don't think it's going to be, that extreme. But even if the Fed were to say, hey guys, we're going to do 50 billion of balance sheet roll off, the market might even respond to that pretty well because the market's already anticipating it. And everyone is loading up on put options. That is the key thing here. Everyone's fearful. Everyone's, going crazy on puts. So yeah, heading into Fed Wednesday, I do have a little bit of a bullish bias, even though my trend model's a -3. When my trend model's at a -3, the max long exposure I can have as per my trading rules is 33% net long exposure. Right now I actually am breaking that rule and I have about 50 or 45% net long exposure. But most of the exposure is synthetic longs through short puts. So it's kind of like a conservative way to be long. Tomorrow for earnings, we do have Airbnb reporting, which is a high flying name. We'll have to see what that one does. We have AMD reporting, Starbucks, a bunch of different names. A lot to be excited about. Let's take a quick look. There's some charts that I would like to look at here in terms of just the rotations going on in the market. We have Mattel. Take a look, nice pattern even though the market's been very weak. This one reported strong earnings, had a nice little power earnings gap, and we're holding fine. It doesn't really look like anyone is selling their Mattels. This one's looking good in an otherwise very weak market. We have PRCT. This one is trading right up to this monthly value area high, again in a very weak tape. Some other names, Roku. This one reported earnings 2 sessions ago, and today it is up 11.01%. As I mentioned earlier, these growth stocks, definitely watch out for these because these can have very sharp moves. And remember, no one is positioned in these names anymore. And then in terms of some names that are starting to slip to the wayside, Hershey. Remember, everyone was all in these consumer defensive stocks. This one broke its trend, has a huge red candle on high volume. So it does look like some of the money is flowing out of these inflation hedges, defensive stocks, etc. And then another defensive name, this Hostess, TWNK. This one had almost like a parabolic top, and yeah, you can clearly see money's flowing out of these defensive names. As always, we got to take this one day at a time, but I am starting to see some very interesting rotations on the tape. With that being said, that about does it for this market recap video. Hope you all enjoy the rest of your evening, and as always, I'll see you all tomorrow.